Hi, I'm Jason Smith, Director of CashFlow Advantage, and today I'm here with Scott, our Business Development Manager.
Thanks, Jason.
And today we're going to have a quick chat about whether debtor finance suits your business and the steps involved for getting that debtor finance facility up and running. Scott, you've been doing this all a while now.
Yeah, time flies.
Yeah. Mate, what do you see? Are you seeing typical businesses out there that could benefit from debtor finance or seem to be utilising debtor finance more than others?
You know, it's funny, the short answer is most businesses could utilise and benefit with debtor finance introduced to their business. You know, a typical business offering payment terms to their clients, whether they're outlaying funding business funds to either supply a stock item or provide a service, can sometimes create that shortfall on a business. Or the term they use a lot is there's a lot of juggling every month to make ends meet.
Yeah.
So debtor finance certainly can without doubt alleviate that type of scenario.
And are you seeing a certain type of client, or for us, the clients we're bringing on? I think you mentioned to me earlier that you come across a lot of transport clients that screen out for this.
Yeah, look, I've said it on a number of occasions. There are some industries that no doubt are more prone or perhaps utilise the facility more than other industries.
Right.
There's certainly no one industry that can benefit, but one that comes to mind would be transport. If you think outside a little bit and think of what their everyday business entails, they own a truck. Yeah. They're driving a trailer, whatever they're doing, whether it be interstate or locally. So the business expenses start to amount up. Whether it be fuel in between Sydney to Melbourne, perhaps they've had a breakdown. So maintenance costs.
And the key reason is their terms, isn't it?
That's right. They could drop a load in Melbourne, for example, and back to Sydney. And then they put an invoice in, and the client that they're working for would then not pay for, call it 30 days in a month. Well, that shortfall in between, when he jumps back in the truck.
So what businesses aren't right for debtor finance? We can help almost any business. Who doesn't suit?
Look, typically
in terms of cash flow.
Yeah, look. Typically, construction type natured business, and when I say construction, it really sort of hones in a little bit on the progress claim side of businesses, and there's a few reasons why that makes it hard. Variations of invoices or reworks or things like that, and certainly contracts that linger in the background can sometimes create a hurdle. So unfortunately, in some instances, some businesses will take on a contract not realising deep within that contract there could be clauses that state, for one, you're not allowed to assign an invoice, which straight away, if it's not picked up, can become a problem.
Yeah. Okay. So that's for us. There are companies out there that do contractual things, but for us, we tend to stay away from the contractual progress claims.
I use a term out there, and it's do and charge. It simplifies everything. I always any new client or business I talk to, if they do something, provide a product, do a service, and charge for it, that certainly qualifies for a debtor facility.
I think one of the important things we do want to cover today, without this taking too long, is what's the process? How does it work, and what are the steps involved from point A to point Z?
Sure.
Getting there.
Yeah, look, typically, if it's a new inquiry or we're talking with the business, it's always good to meet with them and get a real good feel and sense of, firstly, I think I always like to know where they see their business, where they want it to go. It's always good to see that they're looking ahead, and that, whether it be for business growth or for whatever reason, you get a sense of what they're trying to achieve, which is obviously followed up. So, look, from our point of view, from an application side of it, if we receive an application, we can have the approval within 24 hours.
So you're meeting with them, getting a feel for them, for their
Absolutely.
business. We're if the P&L's not fantastic, we're not too concerned about that. We're more looking at the integrity of that
That's
client,
right.
and the integrity of the debtors.
Who are the debtors? That's right. So, that's that commercial approach that we just really pride ourselves on. From that point of view, approved application. Look, we will have facilities up and running within 1 to 2 weeks. I guess probably the biggest hurdle, and I think it's spoken in all financial terms, is having the information at hand. Seems to sometimes be the challenge. Not that we ask for an awful lot, but sometimes for that business owner, they're so busy within their business, it can take a little bit longer. But certainly we work with them best we can to make it happen.
We move as quickly as they will.
Absolutely, yeah.
So 24-hour turnaround?
You bet.
Okay. Credit committees?
Well, no, there's not. There's no bureaucracy there. So for what it's worth, I mean, the submission is put in by myself, and then obviously sat in front of you.
Mm-hmm.
So look, the approval then comes from yourself, and we then structure the facility with our clients to ensure that everybody's happy and there's a medium there.
So to recap, there's no credit committees. Look, there's no bureaucracy. We are a privately owned firm, and we turn things around quickly. That's what the major focus is.
That's right.
Here. Yeah. Okay. Now, in dealing with CashFlow Advantage, what's a client going to experience out there?
Look, dealing with us, we're certainly hands-on. We pride ourselves in obviously client business relationship. And look, it isn't a set and forget scenario, especially not from my side of things. I always like, I guess the pride I can take out of bringing on a new client is from the first day I've met them. Perhaps they may have been a little bit stressed or whatever it be, or they're seeing where they want their business to go. And I take great pride in whether it be a couple of months later or 6 months later. You're sitting down catching up, and the colour's back in their face, and they're certainly happy, and the business is going well.
And they're growing.
Absolutely, yeah. It's a nice feeling. It's a good thing to take home.
You mentioned to me earlier, what are one of the major concerns you come across when you're talking to small businesses out there about a debtor finance facility?
Look, probably the biggest thing I hear is just flexibility. Firstly, customer service. Customer service is paramount. Can't get hold of somebody, or I left a message 3 days ago and I'm still waiting for them to call. And then these can be from firms that have been dealing with a client for 5-10 years, whether they take it for granted or
firms or banks.
Banks.
Yeah.
Whether it be a bank or whatever it be. They just paramount is customer service. The other thing being flexibility. Like I mentioned earlier, we pride ourselves on looking on each scenario for what it is. But I know for myself that no two businesses are the same, and they don't operate the same.
And you're finding that the type of facility that people undertake is that partnership facility, isn't it? Where we're in the background with the debtors. Can you elaborate on that?
Yeah, sure. Look, our two offerings is a partnership facility and a full factoring facility. The partnership arrangement tends to work very well in the market. It is disclosed, so the debtors are aware of our involvement. But in that instance, and partnership being, we try and work with our client. We work with our client in the collection process rather than taking ownership of that collection process. So one of the biggest, if I could use the term stigma, that tends to attach to debtor finance is, I don't want you talking to my debtors. And rightly so. I've heard many stories where a funder can be very heavy-handed towards a debtor or something like that. And let's be real, a relationship between a client and a debtor is how their business exists. And if that relationship's severed, well, they don't have a business. And from our approach, if they don't have a business, we don't have a client. So
that's right.
It goes through the chain. So the partnership arrangement works well. Although it's disclosed, we leave the collection process with our clients, and we certainly assist our clients if needed, if a payment's due or whatever it be.
All right. Thanks, Scott. That's great. I think we'll leave it there. If you'd like more information about debtor finance, check out our website, cashflowadvantage.com.au.